Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 22nd of July here in 2021. We're talking earnings and key earnings, not so much the most market-moving names, but nonetheless, we'll take a look at first Twitter on today's session. We had actually Dow Chemical, Biogen, Danaher, just to name a few. Intel was reported after the bell, ConocoPhillips, and then tomorrow on Friday, we'll see earnings come in from the following: American Express, Honeywell, NextEra Energy, Schlumberger, and then onward and upward. But that's just coming into today's session. There were earnings. We still have earnings in play. We still have things that are making splashes and profits and other concepts on the bigger picture. So starting off with Twitter, what we're seeing here is Don's weekly earnings-based expected move, and that is a class here in TheoTrade with respect to looking at the straddle and how to price the expected move for earnings-specific companies. Butterflies are good strategies for this technique. Now, this is Twitter. What you're seeing is the expected move of the straddle comes up to about 79.45, and that's a little bit up here. You can sort of play into that, or 59.70. Now, if you don't play butterflies, it's a little late for that in the video as you're listening to it, but if you want to play intraday tactics off of these logic or these levels, then you might play short up against this level or short up against 77, which occurred if the market does rotate back. So it's a target as you might use weekly expected move targeting. And for intraday traders, you can actually, if the markets trade there, trade reversals or intraday positions, puts or calls, or other options, strategic plays within that boundary. So Twitter is into the 79 or 78 area, and it spiked up after earnings. Of course, you'll know a little more than I will after the video is out, or of course, if you're listening to this in the morning session, that it has hit that shy of that target level and then pulled back. We can also look at some of the others, which include Intel. Now, this one got a little bit wild. So Intel has a trading range. You can see how earnings in the past, if you use the indicator, have resulted in outcomes. So in the past, earnings have jumped, or at least the stock price has jumped remarkably on gaps from earnings announcement. What at this moment we're looking at 60 and 50 cents. That's a little bit higher up here. That piece that jumped up and pierced higher very quickly and then peeled back away from it to about 54, where we closed a couple of days ago. The lower bound is about 51.50, which is down here. So those are levels to watch going forward on Intel. And then Snapchat is a gapper up, or at least at the moment it is. Its expected move, or the earnings-based calculation of the expected move, again, this is auto-generated, is a roughly 71.80, just shy of 72. And Snapchat is up into that level and is making not quite new all-time highs, but new swing highs. And again, that level to play against, if you want to play intraday short or bearish, is roughly 72.50 or currently 73, 72 where we are at this point, 72 and or 72.50. Now going into Friday's session. That's just to name a few. We saw Intel and then Capital One Financial, which also had a rally up. And we can sort of show that to 173, not quite getting it to the upside. The downside is about 149. Neither one of those is being hit at this exact moment, but that just has implied volatility a little bit higher and did not quite get those moves directly on the earnings announcement. If you are curious and you would like to take a look at what happens on earnings, prior and current, you are always able to go inside the thinkorswim platform to the Analyze tab, take a look at the Earnings tab, and from there select your stock. And any stock, for example, Intel, you can see past performance, straddle at the money prices, and of course the implied and historical volatility, actual, which is what the earnings were, and the Wall Street consensus estimate. Looks like Intel has a history of beating the street, and it doesn't always result in upside activity. It's not just the data on earnings per share, it's what they'll say in their report or future guidance or other aspects of the stock. And that's why sometimes you see an initial bounce and then a crash, because they may beat earnings on the top line, but they may later on in their statement say, well, we have good earnings now, but might not have them next quarter. But other components like that play into the earnings. That's why it's volatile. Control your risk. And if you're playing directional swing trades, it can be a good idea to wait and hold off on positions until after the volatility calms down. And that is happening in these stocks. Well, at the halfway point in the video, let's actually shift away from the earnings and away from these stocks. Just for quick reference, the others were UNP, and they had their earnings. It's going to be actually here on their earnings pre-market. AT&T, Dow Chemical, and then Biogen. And these are earnings plays on the daily and lower frame charts. Now let's getting outside of that. We'll go back to our normal chart and take a look at the S&P. We did have a, call it an up day, rally day, range day. It was strength in the technology sector, which is down here. XLK was very strong. In fact, the strongest sector outside of it tied at the end of the session with utilities, but technology was strong off the open. And financials were weak off the open, and that put pressure on the Russell. So the Russell index did trade lower. It still continues to be inside of our trading range, and right now it's roughly at the midpoint. And those levels to watch for Russell or IWM traders is roughly, easy mathematics, is 2200, 23 to 2350 on the upside, and 2100 to 2150 on the downside. Again, this is best seen as a sideways trading range. The Dow Mini Futures has a similar sideways trading range, except it is a little bit wider. Its levels to watch include 33,500 and the big barrier, 35,000. Now the Nasdaq, if you don't trade the Nasdaq or follow the technology sector, you might think that it is not quite as strong, or look at other markets, and it actually is just very, very close to its 15,000 area. And it would be a simple assumption to assume or prepare for any type of upside break beyond 15,000 could continue and would continue the uptrend in motion. What about the S&P? Today, the S&P was pulled between the strength in technology and the weakness in financials, and that created a trading range. If we want to see that a little clearer, we can take a look at the Market Watch tab, visualize the heat map, and see that the financial sector, which is here, and to a lesser extent these were more mixed. You can see the sector performance here, which was split, and of course the individual stocks that make up the individual sectors. Strongest and largest is technology, and then we include communication services. You can think of these as technology, but that's just splitting the sectors in different ways. Nevertheless, these were very strong, including Amazon, and these were very weak. That put pressure on the Russell, which these are the healthcare and financials, and the Russell were weak. The Russell does not have that same type of what we call in TheoTrade monsters of tech, which leads the Nasdaq to strength and continued relative strength near the high. So we can see that in the technology sector, of course, the Nasdaq is the technology sector, but within it are certain components of technology companies. And here are what we call the monsters of tech. They're just very, very large market cap stocks that weight the index and the point totals for the Nasdaq. And that happens to a little lesser extent to the S&P. So the Russell was down over 1%. The Nasdaq was up 1%. And the Dow and the S&P were split in the middle of those two forces to wind up with a slightly bullish, but nevertheless a range or consolidation session. The similar level in the S&P futures is 4,400. And in the broad-based contract, it's also 4,400. These are levels to watch going forward. We had our rubber band snapback as discussed last Tuesday in the video. We're now seeing the reflexive bounce. I don't really have a perfect term for this particular rally, but it's just a pullback, a successfully defended and successfully supported pullback in the context of a broader uptrend on the bigger picture. Be sure to keep the bigger picture in focus. We'll end the video by discussing crude oil, which was up 2% today, and that trailed or traded alongside the equity market, was actually stronger because it's up 2%. Gold was roughly flat and remains in the middle, and the bond market fell a little bit lower and then reversed up on the session. So back to the market. Be careful, be safe. This is Corey Rosenblum with tonight's Theo video update for July 22nd, 2021.